Welcome, everyone. Thank you very much for coming for our update. Rock and roll markets, and certainly very exciting times. Some of you may have seen my article in Forbes that was just before the beginning of the year. I think it was spot on for forecasting for January, and I recommend you take a look at it if you haven't seen it already. Basically, it was an abstract from our December 21st forecast. As you know, we were forecasting a down January. We got our correction. So now what is going to be next is the very big question. A lot of it depends on the Fed, which is an unknown, but all of this recommends being conservative. What we're going to do is I'm going to make a few introductory remarks, and then I'm going to introduce three companies that we're going to just very shortly suggest to you. They were all going to present for us in February, but because of COVID, were postponed to March and May. However, I think they're worth putting on your screen, and therefore I'm just going to have a short 10-minute introduction, and then I'm going to go into some detail on my forecasts. So it's a little different format. We'll talk a little bit. We'll then introduce three good companies, Mag Silver, Goldterra, HPIL Holding, and then I will go into some detail of what I think has happened and what I think is going to change. First, some housekeeping rules. Number one, this is being recorded. We'll post it on YouTube. If you'd like to know, we only do once or twice a quarter these webinars, but if you will press the subscribe button on any of my YouTube videos, you can be notified when they're posted. Also, this is an update to my December 21st forecast, so there'll be certain slides that are not updated that I'm just going to go through rather quickly, but if you want to see those in detail, you just go back and watch my December 21st forecast. We won't be taking questions for the companies because we want to just introduce them to you, but we do think you should, if you have questions for me, just type them in the chat box, and when I finish with my talk, I will try to answer them as best I can. And again, if you have questions for any of the companies presenting, just email the companies directly. I'm sure they'll be most happy to answer them. So that's our basic housekeeping. I can see I'm going to be doing this a lot quicker. And I want to wish everybody a happy Chinese New Year. I think in the future, in addition to doing our December Christmas, we'll be doing an annual Chinese New Year. Those of you in the commodity markets know that the Chinese market is as important as anything else in the global markets. So it's a good time to sort of decide what to do. So again, happy Chinese New Year. For those who are not familiar with this, it's the year of the water tiger that runs till January 21st, 2003. And the water element in Chinese astrology recommends wealth and augurs abundance and prosperity. However, given the political climate that we see globally, a lot of people will still lose fortunes if they're not conservative. As for the Chinese market itself, last year we were pointing out how difficult it would be, and we're still largely going to avoid them through October, even though there are several astrological times and opportunities for which they will make money, all of which with high geopolitical risk. Overall, however, in October, Xi will be having an election, which he's certain to win for the next 5 years, and it's very unlikely that he will allow Chinese markets to look very bad ahead of his election. But again, it won't be as bad as it was last year, and if you follow the Chinese markets, you also know they're clarifying things. They did a lot of moves in the last couple of months that hurt the markets and hurt a lot of their major companies, but at least now they're laying the ground rules so there won't be surprises. And we all know how markets hate surprises. So again, It won't be as problems for the Chinese markets, but a lot of risk, and it's not for us unless you're an insider. A little comment on the Chinese market, and this comes from CLSA Equity. And it's very interesting because they're talking about trade, shipping, and travel coming again, 2 months in spring and in mid-autumn. So obviously things like airlines and cruise ships have been under a lot of water. We're expecting a correction, which we'll be talking about, more than what we've had. But once we hit the spring, and for those of you who like to bottom fish, I think it would be appropriate to pick up some, depending on the pricing, of course, of some of the airlines, cruise ships, etc. So the first 2 months of spring I agree with, and then mid-autumn. Their prediction, of course, is in the Hong Kong stock market, stable growth, which is probably the case, but a sudden decline in autumn. So you have to watch out for that. And again, since this is a water year, we do like water companies. And if you've looked at water companies, they tend to even, for the last 30 years, outperform gold companies. So they're very good defensive plays when the markets are down and you want to basically have something that is not going to be too risky, then I would recommend taking a look at water companies or the water ETFs. Again, most market bulls have a great view like this. They don't see what's happening, and that's why one day the market's up, the next day it's down. Depends on what they're ignoring, but we don't think this is the smart way to be. There is no doubt about inflation. Even the Fed's thrown in the towel on that. 5%, which used to be the ceiling, is now the floor. We're going anywhere between 7 and 10%. The Fed fund rates are going to be raised from 2% targets to probably 3%, which would be their wet dream if they ever get to it. But more likely, in the best scenario, it will be 4% at the end of the year, or 3 to 5 to 4. But the truth is, it's probably going to be a lot higher. But they're going to shoot for somewhere between 3 and 4%. So we're going to take a middle target of 3.5, but certainly much higher than the bonds had been in the recent time frame. Economically, we see stagflation light because as interest rates go up, there's going to be a down move in the markets, but it's not going to be a heavy one because of a lot of government support. Most of you know that we have 5 canaries that we were looking at. We reached all of them, which is one of the reasons, among others, that the markets went down. We look at the bond rate, 175, 170 to 175 now is the floor. And we'll certainly be going to 195 to 2.25 over the next quarter. The VIX, 22 to 26. We were using for a while Tesla, but we went to Riv instead. That dropped. Bitcoin went under 44. We have new numbers, by the way. We have new canaries we're going to give you. And, of course, GameStop went up. So we got all 5 of them, and the markets went down 10%. We don't think that's all, although 10% was enough for some people to buy. There were several no-brainer movements. Shorting bonds was as simple as you could get, whether it was from 130, 140, 150, we went up to 175, came back down again to 140, 50. But basically, if you just held it from a good spot, you made money. A little bit different now. We'll talk about that later. Buying natural gas, going from under 4 to 480 was a no-brainer, especially every time they talk about Russia and the Ukraine. So that was a no-brainer trade. Shorting markets was a little bit more difficult, but if you followed reasonable advice, even looked at our Twitter account, or just use your own technical things, it was not as easy, but there were plenty of quick profits. The problem was it didn't stick to it. So the markets went down, up, and we had to basically take trading profits half and then either hold it for further or get stopped out to even. But these are all, relatively speaking, no-brainer trades. We give, and we'll be giving you as well, 3 winning swing trades. All 3 were home runs. We suggested buying gold, and we made, depending on how you want to look at it, $50 to $70, almost $75. And we suggested buying it out of the gate. That would have been $18.05, so you would have made about $45 or $40, depending on how you stopped it. A good trade. Selling the markets from $47.91, Christmas time, again, a home run. You could have traded it in any number of ways. And our third one, which was to buy copper or silver on weakness, we basically did silver at 22 and got a good 10%. Went higher, but we got stopped at 10. Again, these are trading markets, all 3 winning swing trades. We're going to give you 3 new ones. And of course, shorting the bonds from 146, and we took some profits at 166, 175, and 184. Couldn't be better. So for those of you who don't want to spend the next hour listening to me in detail what the markets are going to do, just want your 3 trades and then go home. Here are our new 3 trades. 1, February, shorting the market. That's to say shorting market rallies for a March drop. Shorting market rallies for a March drop. That can be done today. Could have been done yesterday if you want to, MOC. If you're conservative, you write June calls. If you're aggressive, you short this week before Friday. Second, gold is going to be strong in March. February, it's going to change. Hopefully, they'll recognize it's an inflation metal. Right now, every time there's inflation, they've been shorting gold. Maybe we'll test the bottom. Maybe we won't, but it's going to be a different market as we go into March, and then we'll be at least, we believe, at about 1870, maybe higher. And finally, we'll be shorting marks before March 1st, 28th, as we get into the Fed time. So 3 winning trades, short the market now, aggressively, conservatively, buy gold for the March rally, different ways to play it, and short the market again. And we'll be hitting that several times ahead of the Fed time. So when I return, because I'm going to have the companies present in a moment, we'll be presenting 3 companies, but then we're going to talk about, will it be a correction or a bear market? What are our new canaries in the coal mine? How to benefit from inflation. We know there's inflation, so it's not just a question of protecting yourself, but with every crisis, there's an opportunity. And as we know, the Chinese pictogram, crisis is danger plus opportunity. So how do we benefit from inflation? We'll update our gold forecast, and of course, we have a lot more. So I hope you will stick around now that you've gotten those 3 trades, but still. Now, why am I presenting 3 companies now? Well, these are companies that were supposed to present for us in February. Due to the Canadian situation and the COVID situation, they postponed it to March and May to present in New York, those of you who attend our New York events. But I felt that many of these companies will have some good moves in advance of that, not that it won't be good to buy them then. So I asked them to do very short presentations on the companies. Those that interest you, hopefully all of them, I would at least put on your trading screen, and when it's appropriate, if it's appropriate, to buy them. I do have one of them were involved with the company, so we have to be a little bit careful about what we say. But on all of them, I recommend at least putting them on your trading screen. They're all very interesting companies. So just in a moment, I'm going to introduce first Mag Silver, so give me a moment to get them up here. Then I'll be introducing Goldterra, and then we'll be doing HPIL. Now again, none of these, we will have Q&A, but we recommend sending any questions you have to the companies, and of course putting them on there. If you like it a lot, get on their email list. So let me go find George and bring him up. Oh, that's great. Hi, George. Got to find you here. I should probably be playing some music for you all. Oh, that's great. Oh, there he is. First, hello, George. I'm going to unmute you. Good, good, good. Put your thing up a little higher. And I'm going to, oh, what you think? Let me, let's chat 1 second. Whoop. And I'm going to now bring you up as presenter. Where is it? Change. Switch presenter. And just accept it and we'll bring you up. Okay, George, can you see the welcome?
Yep.
Good.
I'll click
Good.
on start sharing.
Sorry you couldn't make it in person, but I'm glad we have you up here. Okay, and then don't remember to share your screen. There we are. Oh, beautiful. By the way, these 2 dogs are the secret of the company. I don't know if George is going to tell you, but that's why this is one of the best silver companies you could possibly buy. It's a I don't know if he's going to reveal the secret of the company, but they're the real reason why this is one of the 3 silver companies we believe you should have in your portfolio. Okay. How else have you been? Okay, George, you're on.
Thank you, Henry. And hello, everybody. Wish we could be there in person, but silver, for those who know us or have followed us for the last few years, you'll know we're emerging as making some forward-looking statements today, but we do like to say that MAG Silver has a history of turning forward-looking statements into facts, and hopefully we hold our ESG commitment to sustainability, safety and the environment very close to our the deer trail, and we're strongly aligned with what Fresnillo are doing at the One Scipio operation. For last year, all of last year, and continuing into this year, we are from One Scipio as we complete the electrical connection and start to run one. Commissioning will commence at the end of the second quarter of 2022, and we straightforward ramp up to 85 to 95% by the end of the year. In months in similar plants, so that's why we're confident with that ramp up. We'll continue to explore. We believe that the significant. Here you see a recent photo of the plant. All that remains to be done actually is complete.
It's not showing, George. Do you see the plant? Do you see it? I just see the dogs on mine. Mark, do you see it? No, George, all we see are the 2 dogs.
What?
All we're looking at, did you share the screen properly there?
Yeah. Well, you don't need to see the 2. How about now?
No? All right, well, just know you're doing this with finger puppets, and for some reason, I see your screen, but it's not moving.
Do you see the presentation?
No, we just have the 2 dogs.
Well,
I mean, I did tell everyone it was the secret sauce, but
yeah.
I think they probably want to know that you've got one of the best silver properties out there at some of the lowest costs with some of the greatest exploration potential that you could possibly want.
Yeah, do you see?
No, we just, for some reason it's not. I don't know why, but all right. Just assume, George. Just tell them a little bit about it, because they can always. Oh, now it's a screen, but we're still seeing your home screen.
Out now.
Did you share it?
Yeah, I did share.
Well, for some reason we're not getting it.
Let me come back in.
All right, we'll try again.
Yeah.
That's all right.
Henry, if you could send me that link to select sharing again.
Well, I tell you what, since we don't have a lot of time, George, on this one. Why don't you just talk about it in general? Look, people know this is one of my favorite companies. The stocks, you know, to me is close to a 50% or 100% in the next year. That's my forecast. George can't make forecasts like that. It's very much geared to silver, and they have exploration potential. They've got it there. They're going into extra production, and they've got. So just talk a little bit about that, George, because unfortunately we only have a few minutes. So
we have able to generate cash flow from our underground mine by processing in the neighbouring an electrical connection, which we believe will be mid-year, and it's sort of the plant's ready to electrical authorities to connect us. But the unique part is we're going to make comparable cash flows by processing rather than our plant. So, you know, the plant's on budget. We're going to make pretty handsome stepping up the production over the last, 18 months. And what the metallurgical performance will be. And as good as this story is, and Henry, you talked about the margins, I think they explored 5% of the property. And, you know, the Juana Scipio property remains very much an exploration story. Geological theory now as to why there are most likely other Scipio property, and what makes the Valdecanes vein, which is what sits on top of an upwelling zone, a fluid upwelling zone, and that's what geologists believe. We've definitely found one, but we believe that there are more, and so we're starting to explore those now. And what's in relationship now between Fresnillo and Mag Silver is very positive. It's very focused on property. And so, you know, we're excited about what's happening here. We're going to start to generate we're very motivated to return that to shareholders once we have balance sheet strength. And, you know, we're very, very, shouldn't use the word excited too much, but I can tell you we are very, very excited about drilling for one of those. So we're going to start drilling our Sessantoni target up in the northwest. Watch for money starting to come out of Juana Scipio, but also watch for further exploration in different areas. The Valdecanes area being on an upwelling zone, anything we hit down there that's permeable will be mineralised, and we've them now. But if we can find another one of those, it's another game changer on this property. And, we're looking forward to 2022 and moving forward.
So there's just about a minute left, because again, these are just introductions. Any sort of overall comment you'd like to make?
Well, I think that MAG's trading at a, and you know, there's no value factored into our share price at the moment for our exploration. And that's an opportunity that we're pretty focused on as well. You know, we like that could be found here at Deer Trail. So we think as we start to re-rate into cash on Deer Trail in Utah if you're buying mag at these prices. The balance sheet's well, we've really, you know, we're very much a de-risked.
Absolutely. Absolutely. And I think the re-rating is definitely coming this year along with a lot of good news.
Yeah.
Okay. Anyway, that's it. Thanks. And we did at least put the secret sauce on, so that's what people saw. And we'll definitely see you in May in person. Those of you in New York will have a detail. Those of you who are at a distance, I recommend taking a look at the website and downloading one of their presentations and look at it. If you want to own silver companies, this is one of the ones you definitely want to own. Both, it will go along with silver, and it has lots of potential upside for re-rating. Thank you, George.
Yep,
and I look forward to seeing you in May.
I'm really looking forward.
Absolutely. Okay. Now let's go back to, we're going to now introduce Terra. Hopefully we'll get that a little bit better. Okay. Hopefully this will. Hi, George. Gerald, rather.
Yes, I'm here.
Much louder. Hopefully we'll get this one going a little bit better. We'll get the switch presenter up. You should have it. Hopefully we'll have a little bit presence. Okay, we see your screen.
Got it?
We got it.
I think, unfortunately, George did not bring the PowerPoint presentation on his screen.
I know.
Anyway, thank you very much, Henry, for hosting me today. And without any further delay, because I would like to keep my presentation in 10 minutes, I would like to introduce you to Goldterra story. It's an exploration development story in a gold camp in Canada. And with all due respect, I'm going to go over the forward-looking statement, cautionary statement. This is a public company, and you can find that all the information is on our website, and it is of a public disclosure. Everything is disclosed on our website as well. Now, what is Goldterra? An exploration company located in Yellowknife with a value of $30 an ounce. So basically, I'm not saying that you're going to make $1,750 profit, because there is development costs, there's operational costs, and of course there's valuation. But we only have 1.2 million ounces, and this year alone we're going to be targeting a very high grade area of the Campbell Share in Yellowknife. And I'm going to go with this, but I wanted to show you this slide to show you that currently we are very undervalued with other exploration companies for resource pre-development. $32 versus an average is way more than $50. And as you get closer to operation, usually valuation goes to $100, $200 an ounce, and there are some comparable for that. Now, when you look at what we've been able to acquire, I've been involved in this company for 2 years, but I'd like you to know where I come from. I'm a geologist. I worked for 35 years in Canadian and exploration experience. I spent 12 years at Barrick Gold. I worked with Louis Dion, with Alex Davidson, with Bob Smith. I am at Barrick for 12 years, which was probably one of the greatest schools. I put 2 mines in production and was there. And then in 2006, I founded Detour Gold, which I brought from a market cap of $140 million to $4.9 billion. And I brought the company from acquisition in January 2007 to the first gold pour. And now this mine produces 500,000-600,000 ounces a year. I was there for 8 years, and I was the architect and the founder of this company, which delivered all those ounces. So Louis Dion, which was a very good friend of me at Barrick, joined me again on the board of Goldterra, which I joined 2 years ago. And the biggest thing that I've been able to do, we have a list of our shareholders. You have 200 million share. We don't have a big market cap, roughly $40 million Canadian, $32 million US. But at the end of the day, it's the value proposition to create value in gold. I mean, buying gold at $30 is not bad. But if I can get valuation of $100 and I find 2 million ounces more in 2022, you will benefit from this valuation. It took me 2 years to do the Carmine strategic acquisition. Very similar, for those who may know, of the Skeena-Barrick deal signed in 2017 for the SK Creek mine. And this Skeena acquisition of the SK Creek from Barrick, now Skeena is a billion-dollar company. I'm not saying I'm going to be a billion-dollar company 3 years down the road, but for me, when I joined Goldterra, I told the management and I told the directors, we need to get the Con mine because it's the Campbell Shear. The sparse poverty, you can see it's immediately in the town of Yellowknife. It's a town of 25,000 people. It's very well suited with all the infrastructure. It's a historical producing town, so they know about mining. This property is very small. It's only like less than 10% of our property package, which is 800 square kilometers, with excellent potential to find more. But the key element in the Yellowknife camp is there is 2 mines that produce from the same deposit, Giant and Con, at grade of 15 to 20 grams, or half an ounce to 3/4 an ounce. So very rich underground mine and very prolific. And I can show you now just a trace on the Con mine that we just acquired and where we're drilling, where 5 million ounces of gold has been mined at the grade of 15 grams. The Campbell Shear, which hosts all of the gold mineralization in Yellowknife, where 14 million ounces was produced, is still open to the south and at depth. And our compilation has shown that we have 5 million ounces in front of you. The green is kind of like the envelope of the ore zone, while the red, the yellow, and the pink are what was mined. And you can see the high-grade mine, and you can see that south, what you're looking at is a vertical section showing the mineralization from surface to depth, looking west, north on your right, south on your left. So you have a composite of all the Campbell Shear that was mined, explored, developed to produce 5 million ounces. It's a very small area. It's barely 1.5 by 1.5 kilometers, or 1 mile per 1 mile, basically. And so you can see potential zones such as a Yellow Rex, hole Y88, 14 grams over 5 meters, which is economic grade and economic grade, and over economic width. And you can see some of our results from the 2021 drilling, hole 2022, 20 gram over 5 meters near surface. And what you can see now is basically the drilling that is ongoing as we speak. So as we speak, the 2 black stars are where we're going to be drilling in 2022. As we speak, we've got the rig turn-in, and we expect that we're going to find about 2 million ounces south of the Pod Fault, which is the extension of the Campbell Shear to the south. Now, we did this deal with Newmont to acquire 100% of the Con mine because we believe we can find more than 2 million ounces. But the deal requires us only to find 1.5 million ounces, make some payment 4 years down the road, possibly taking the liability of the Con mine, using some of the infrastructure. There's already a shaft that goes down to 2,000 meters that we just have to dewater and refurbish. It's a concrete steel shaft, all the way to 1,900 meters vertical, built in the 70s. And we know it could be brought back into good condition and use it. But you have to realize that the potential to drill in 2022 is tremendous. Over 3 kilometers, the first pass is on 200 meters spacing, and we should be able to generate a lot of very good results. And as I said, if we find 2 million ounces and the market gives us $50 or $100 an ounce, our company, which is currently $30 million market cap US, could go to $250 million. So it's a very good opportunity. You're in town, you're not in the boonies. The cost of drilling is averaging $200 Canadian per meters, or $150 US. It's a very good opportunity to bet on a company that will be drilling and creating value for its shareholders in a very short time. This is an example of our drilling in 2021, where we started infilling the zone at 50 meter spacing. So we have a core. The zone is 200 meters wide, long, about 10 to 20 meters in width, with some high-grade mineralization over 5-6 meters in an envelope which is about 20 to 30 meters in width. We get about 2,000 ounces per vertical meters, 6,000 ton per vertical meters, which gives us an idea that the zone could be already 500,000 ounces. So we're not like starting from scratch. We already have a zone that could be 25, maybe more of the 2 million ounces target that we have. On the next slide, you have a quick section showing you the result. The zone is subvertical. It's very continuous, very good grade, as you can see. And our story is very simple. We're going to be drilling in 2022, about 40,000 meters of drilling. We expect we're going to have a resource at the end of the year, and we're going to move on to a PFS or pre-feasibility study and baseline study in 2023, and eventually finish the feasibility study 2023, 2024, and be in a position to decide to develop the project. But remember, we have infrastructures. We're in the core of Yellowknife. We have a very good engagement with the city, with the First Nation, with the Chichu government, and also, of course, the Northwest Territory government. We've been there for a number of years, and we'd like to welcome you to visit our website. Contact me directly. My email is on the last page of the presentation, and we'd like to thank you very much for your time, and I look forward to meet you in person in May. Henry?
Yes?
Was it good enough? I did my 10
Yes,
minutes.
very good. I'm just now trying to get our next person. Thank you very much. So, just want to make sure.
And you can never own enough of Goldterra.
Okay. Well, obviously, this is very different than the first one. Besides being gold versus silver, it's obviously an exploration story. These are ones, if you want to get, doubles or 5 bangers or stuff like that, they're high risk. But you've got to look at they have some good management and a good property. Those are the two things you look at. And if you like that type of high risk, this is the type of company you want to put some of your speculation capital in. Good. There he is.
Much less risky than a lot of other property being in Canada.
Right. Okay. Thank you.
Thank you.
Perfect. Hi, Steve. Nice to see you.
Thank you very much, Henry.
Good. We're going to put you up in a second as presenter.
Okay.
So just click what it says. You don't hear Steve, right? What do you do? Okay. Okay, just click the presenter part.
Well, it says start sharing, but it won't let me click.
Oh, that's good. Or not good, as they say.
There we go. Okay.
Okay. Can you hear him? Mark?
Can you hear me, Henry?
I hear you. Yes, we're good. Let me just a brief introduction. This is a company that I actually work for and have big positions in. Therefore, I'm not allowed to say anything else at the moment, except take a look at it.
Can I go ahead now, Henry?
Yes, you're ready. You're on.
Good. So my name is Stephen Brown. I'm the CEO of HPIL Holding, a company that I'd taken over approximately a little under a year ago. There was actually a dormant company that was in administration, and we have different divisions within that company. One of the lead projects is a electric vehicle powertrain management system. If you go to hpilholding.ca and click on Apogee, you will learn all about it. It's not an electric vehicle, but it is. And what I quickly mean by that is it's a unique method of how the powertrain runs and generates energy from there going into a capacitor and such. That's as far as I can go with that because we're in the middle with certain patents that are being filed, but it's a very, very unique, groundbreaking management system for the electric vehicle. Something that we hope to be sharing not only be with other automobile companies, but also we're building a vehicle with that management system in ourselves called the Apogee D7. It also fits in other vehicles such as motorboats, motorcycles, and such. We've actually just signed a letter of intent, and it's probably closing very shortly, where we've taken over, it was the fastest electric motorbike in the world, called the CIZ, and it was developed by a gentleman by the name of Michael Ciz, C-Z-Y-S-Z. You will see the press release on the letter of intent. It was the fastest electric motorbike in the world from the Isle of Man. Unfortunately, he passed on of cancer about 3 years ago. We've worked out with the family estate. We're going to be working that with our powertrain management system and many, many other elements within the Apogee, which is the division that we've called the electric powertrain management system is called Apogee. We also have, as you will see on HPILholding.ca, we have a gaming division, something that I've been very heavily involved in the past 5 years. And we've starting to release some mobile app games. One we've just released over the Christmas holidays called Get Santa. And again, it's strictly a mobile game, which are very, very substantial, and they do very, very well, as we did on this one. We were one of the top 10 Christmas games on the Apple download store and the App Store. We have other games coming out, as you will see in press releases. We are in the middle of building a very substantial, we've been building actually for over 2 years, and we brought it into the HPIL fold, and that's the new metaverse, which is exactly what Facebook is doing. We would think this, but we truly believe that our metaverse is very substantial and much better than the Facebook one, which they are launching. We have a great team here. Again, if you look at the resumes on the website, the president of the company is David Postula, who I've worked with for quite a while. He is from the high-level, executive level in the semiconductor industry, and he has now headed up our company for the past, almost since the beginning, I guess. Yes, actually from the beginning, which is, again, is approximately 8 months. I don't want to say the downside to this, but I'll just say it. We are a penny stock. It trades, a little under half a penny. Since I took it over, it went from 2,000 shareholders to over 7,000 shareholders. We've had a lot of cleaning up to do. If you see any history, it is cleaning up. We are pink right now. We will be pink current probably in the next week and a half at the most. It's just taken a lot of cleaning up. There was some toxic notes involved and such, and we've cleaned a lot of stuff up. And the company, it's traded anyway. On a bad day, it trades $500,000. On a good day, it's traded as high as $18 million at half a penny. So it's pretty liquid there. We are, again, tightening it up, and simply because of sort of the great business things that we have involved. But again, it's a lot of self-explanatory there, and please watch out for it, because you'll be hearing about it pretty substantial, if not already. So I thank you for the opportunity, and hopefully be able to give you much better updates in the very, very near future. Thank you.
Okay. Thank you, Stephen. Okay,
thank you.
We're gonna continue now with my presentation. That's obviously an extremely high-risk company. They'll be presenting in New York in March. It's certainly interesting to be watching it. And electric vehicles are definitely very hot at the moment. Okay. So we're going to, let me get mine up. No. Okay, give me a moment. Okay, so Steve, we're going to take you off. Okay. Whoop. Now I just have to get myself back up here. Excuse me a moment, folks, while I bring up mine. Okay. I'm here. Now let's get you. Okay. Irene, my audiovisual girl, is in Florida. For some reason, she prefers it to snowstorms in New York. So please excuse some of the latenesses that we have here. Let's go. Okay, where's host? Mark, you don't see my stuff, right? You don't see my slides. I'm having trouble with slide day. Okay. Let's try this again. You get to see me, but you don't get to see the slides. Let's see why not. Okay. So, let's go back to share. Let's try that. Start sharing. There we are. There we are. Okay, now we've got a lot to talk about. Again, we just wanted to have brief introductions to those three companies that we had a moment ago. I think they're all sort of interesting. It was just meant to be a teaser. We'll probably do that shorter next time, 5 to 8 minutes, because we just want you to think about those companies. Okay. Very often, if we were doing this live, we'd ask where you think the S&P is going, oil, gold, etc. We don't need to do that here. Again, certain slides I'm going to run right through because they're basically repeats from December, but there are a lot of update slides. So the first update we have is we have a new canary watch. When is the market going to go down? I think at least 15%. We've gone down 10, and then there's been a lot of buying. It goes down 15, there'll be a lot of buying, and if it goes down 20, there'll be a lot of buying. In the spring of 2020, we were correctly timed, as we were here, to be short, but we thought the market was going to go down 10%, and it turned out it went down 30%. But we certainly think the markets are coming down again. Certainly they'll retest the lows at least once, but I think they'll go break it before March or after March, depending on the Fed. So we look at bonds. This time the bottom is 175 because we're going to 2.25 with a stop. Stops at 185, 195, and 2.25. The VIX when it's over 26. Bitcoin, we've lowered it a lot. Now Bitcoin is higher than this now, so for it to be a canary, it's got to go lower. Tesla, which briefly touched 800 with hundreds of time PE, that has to change. GameStop, again, has to go lower. But we're adding JP Morgan and oil. When oil goes over 90, if it goes, it's got a lot of resistance at 88. That's definitely a canary watch. And JP Morgan, which is a big Dow stock. So this is our new canary watch, which we'll be posting for you. Again, we, in general, will have a bearish bias until we see 4,000 on the S&Ps and lower on the NASDAQ. We got to the 14,000. We expect to see the 12, possibly 10. But we may not get it, but that's what we're expecting. So benefiting from inflation. We know there's inflation. You don't want to just run away from it. So obviously gold is a classic inflation hedge. Yet at the market, every time there's inflation, the computers are selling gold because the dollar gets stronger. We think that's going to change, just like up till recently, every time the market was down, people would be buying bonds, but that's less so the case now, and we think somewhere this month, gold will resume being a classic inflation hedge, and by March, we expect another $50 rally, and potentially to 1870, which is our fair value. Obviously, all commodities, oil, natural gas, metals, agriculture can be inflation hedges, although natural gas and oil, I think, are near their tops, although they've got some good horoscopes. Real estate is a very interesting play. There's been a lot of inflation in real estate. Places in Florida and Texas are up 100% in 2 years. Even in New York, there's been a 30% increase in real estate rentals. But we have to see how they get hit once we have interest rate increases, which we hope is a half a point, but may not be. But certainly there are real estate is far less volatile than cryptocurrencies and commodities. Now, what's going to happen are two things. As inflation continues, discounters are going to do better and better because people are squeezed, and luxury providers do well. And we saw that before. So you look at the top and the bottom and the middle class get squeezed. Banks, we've had most of the run there. If there's a little inflation and not terrible, they'll be fine. If there's a lot of problems, such as the people who may get evicted from their homes, then the banks may take some hot water. But they're certainly worth watching. We're going to give you a few more inflation hedges that are classic. The big problem people have is when to sell. I always like to play the gambler, and I think it's a time to sell still. Now, of course, a lot of people are betting against me, and we got a 10%. Could it be all? Yes, but it's not our bet. So how long and how low does it go? Well, certainly we won't know till March, and there are buyers at 10%, 15%, 20%. I think 15 is almost a no-brainer. So we monitor for individual stocks 52-week lows, IPO pricing, and both the 20 and 50% corrections from year highs. Many stocks have gone 80%. You may or may not want to buy them. The most important question is, if markets drop 10 to 20% more from where they are now, as they did in the winter of 2020, will you be ready and able to take advantage of it? This is the most, whether it happens or not. Unfortunately, a lot of people were not buying, as we suggested, in the winter of 2020. If we get that way in March, will you be able to take advantage of it? Make sure you're not on some margin that you can't. Once we go another 10, 15%, the Fed will obviously do a panic reaction and change things and do their number. But can we go 10 to 15% more now? Absolutely. And be prepared that you can. So have enough cash and enough resources that if we get there, you can buy. If you want to nibble here individually, that's fine, but it's not our bet. We've talked about this many times before. It's different because of the retail investors. They're still getting burned on their meme stocks. They haven't gotten burned yet on the cryptocurrency. Either of those things will change. But we've talked about this before, and again, these are updates. So this is all on my December situation. The points to remember, there's still inflation, and the Fed is at the moment not doing a very good job, except talking and not acting. And this is how the public feels squeezed. So the lower end discounters are going to do very well. There are lots of reasons why we can go down in the marketplace, inflation, bond prices. The one I'm hoping for is a Bitcoin and meme collapse, because that's dumb money. There's a lot of money that can be made long and short in trading it, I grant you that, but it's worthless. These are pyramid schemes, and the sooner they're gone, which may not be this year on Bitcoin, but I'd love it to be, 30,000 is a key number. If it breaks below that, then the people will run away. Until it's that, you still get 100,000 targets. Little reality in the marketplace. We do a lot of day trading, but look at those numbers about the 220 close and a 20% correction. It's almost identical. See, if you look at the Dow, the S&P, and the NASDAQ, it's almost identical to a 20% correction in the market. So that's what our ultimate target is. We may not get it, but that's what make us happy buyers. That doesn't mean we can't go lower. We can't go 30 or even 50%. There are scenarios, but less likely. Certainly, when we get down here, we'll be buyers. We may buy a little earlier, but this is one of the places we'll be buying. And as technical people, we always look at the 20, 50, and 200-day moving averages, just as every smart computer program does. So markets have corrected, but we're still pretty much aside and short, and we're still primarily defensive, high cash levels, lower no margin, we're writing calls, hedging, short-term trading, lots of it when we do, and other times, oh boy, this is an old slide, I've got to update it for October. Okay, the thing that's obvious now is that 222 winners are not the same as 221. So again, I think COVID's in the rearview mirror. Obviously, there's a lot more testing going out till April 1st when the government's supporting this, but it's over. The politicians don't know it, and other people are trying to make money on it. However, we all know periodically fundamentals matter, and that markets will, in the future, assign, we don't all know this, but we will know it, more value to companies that generate cash. So we're going to see a rotation out of purely speculative stocks into lower valuation companies generating real stocks, value stocks. That's coming, whether it's March, whether it's now, it's coming. Again, the fact people are buying shows they don't worry. Market's up again today. It's going up and down as yo-yos. Today is a key day. We have to see the close. I can give you lots of positives and negatives all the time, but there are less positives for the market than there were last year. There are plenty of negatives. That doesn't mean we're going to have it, but there are plenty of negatives in the market. You can make your own list because it doesn't matter. But there are negatives. And speaking of Biden, he is going to be in a lot of difficulty. Okay, technical analysis. These are numbers we all look at. And as computer things, when we're under 200 moving day and so forth, but we can certainly get well under these numbers. So we were basing our last shorts were 50,000 and 4K on Ether, basically around 40 and 3,000 were shorter term shorts on Bitcoin and Ether, or we might, if we get up there, we may reshort it. The problem with Bitcoin is it's illegal in more and more places. There's going to be more regulation. There's going to be higher inflation, competition. There are better coins and central bank digital currency. The technology has flaws. It's no currency or inflation hedge, and it's environmentally unfriendly. So what's the positive? Well, it's a metaverse currency, some of them, and they're greedy sharks who are making money from it. Look, you can make plenty of money long and short, but I think it's a pyramid scheme, and I think you have to really watch out, whether it's this year or next year. But unless we get up to higher numbers, we're not going to bother doing the astrology. So we've given this before. Our sixth cell is perfect, still making money. But the interesting part is if crypto breaks 30,000. Until then, all the crypto people say, I don't care, it's going up, and it's going to 100,000 or 1 million or 10 million or 100 billion with all sorts of greed. But we need to get under 36 again. We need to get under 2,500 Ether. When we do, they will then join our list of canaries. But until we break that, or 28 to 30 if you like, the crypto nonsense will stick around and be trading heaven. We think this month is a good chance that gold will once again be seen as an inflation hedge. That's a February. Once they do that, the game changes. Just as if Bitcoin, or when Bitcoin drops, then some of that money will go into gold, because quite frankly, many of the reasons, but not all the reasons, people are buying crypto is because of the same reasons they would be buying gold. I've said this before. Again, the main thing, we said gold will drop out of the gate in January. It did, and it's going to be a similar rally in March, or for March. So that's February is a transitional time, but hopefully it will be seen to be an inflation metal. We're keeping the same valuation of gold. It's basically 1870. So as we're speaking, it's undervalued. As a cosmic value player, I like buying undervalued. Silver is worth about 26. So we have 22 support where we did the last buy. We got out because we have plenty of gold and silver. These are just trading things, but they're both undervalued. I think they'll do better in March, although gold will do better. So our current trading is to buy gold on dips under 1805. The last one was about 1788. We buy on dips on silver under 22, which we did. Copper under 420 we haven't seen. Oil we've been accumulating, but we don't really like it. Although when it hits about 92, if it breaks the 88, we'll start selling it or shorting it. And bonds we think are going to easily go to 195 and higher. And unlike before, even when the market drops, the bonds will not retreat as much. People were buying it before for the whole year as protection, but since bonds are definitely going down, unless the Fed comes in with emergency actions in a much lower market, there's going to be less of that protection we need when the market's down on bonds. We've talked about this before. Again, there are changes coming in Aquarius. This is in detail on our December 21st. The one thing I didn't stress previous years, but is the decentralization, and not only the robotics, but the decentralization, because Aquarius, unlike Leo, I'm a Leo, I like central power, that's why I live in New York. Aquarians are the exact opposite. They like decentralization, and that's a big part of what's going on with crypto, with Web 3.0, with NFT, and of course distributed autonomous organizations. So that's just the beginning. We're at one Aquarius. It's got a long way to go. I think it's overhyped at the moment. Aquarius we've dealt with before. The symbols, again, this is all before. Now, I'll repeat this. The December 24th Saturn-Uranus square, that's what gave us the 10%. It can give us more, but it may be enough. But notice in April 12th, so when we hit April, we can have a rally. That's just about when money would come into the stock market. I'm hoping for a really strong drop in February and March, and then we'll be buyers for that April move. And then in October, again, we have problems because the markets will not be totally corrected. But, so again, we have this time frame. We're hoping, we got our money, but we're hoping for more, but we'll certainly be out of that defensiveness by April. Mundane astrology, political astrology. Biden has a difficult 2/22 and a doubly difficult November 22. If you think what Trump had in 2016 and reverse it, that's what Biden has in 2/22, which will make a lot of Republicans and independents happy, Democrats, depending on where you are. So this is going to be very important for the election, which augurs very strongly for the Republican. India will do well, so that we'll be focusing, even though there's plenty of opportunity in China, we're focusing a little bit more in India. Fourth quarter is when we're really going to play it. It's going to do pretty well. They're doing infrastructure and everything, but at the moment, we're making a fourth quarter play. But it will do well all year. And finally, the China markets ahead of Xi's coronation should be highly supported, certainly, as we get closer to his time. And oil, of course, is positive for the first half. That's sort of an obvious game. So that's our basic mundane situation. The first time we're talking about Biden, though. Dates, short term, today, Friday. Then we look at February 11th, 15th, and 16th, most of which are down days. But think about the FOMC meeting. Nobody knows what's going to happen. I always know what the Fed should do. I never know what the Fed does. But I do know. And no one's going to know on the 16th except a few insiders. So the 15th, you know, is a down day, probably beforehand, because the markets hate uncertainty. So into that 14th, 15th, et cetera, you want to be short for sure. So these are dates you want to look at. March is positive on gold. February pivotal. If we get above the 1850 level, then we'll just go further in March. Silver and copper are more positive than negative, but we're playing them on bounces. Oil currently has an 88 support, pivot hedge with 80 support, 92 resistance, and bonds are just on their way to 225 and higher as we go forward. Again, the Fed will be lucky if this 3.5%. Their 3% is fantasy land. 3.5% if they're lucky. 4 is potentially manipulated. And China still has an issue. Again, the major astrology, which is the Saturn-Pluto, is similar to what we had with Russia in the beginning of the Cold War, and we're still at the beginning of the Cold War with China. Numbers pretty much the same as before, technically slightly adjusted. We don't need to give that. Indian astrology was spot on, but it's somewhat, and boy, were they good on the IT section, the pharmacy, but they're showing more decline. So even though we like India, there's a lot of stocks that will have some problems. So that's why we're doing it mostly fourth level. If I was an Indian astrologer or playing the Indian markets, I'd be trading it but it's going to be sort of a neutral game here, especially until we get to the fourth quarter. Okay, valuations. I'm a cosmic value player. We only have two things that are valued properly. Copper is in the right range. U.S. bonds are in the right range for the moment. Gold is way undervalued, but for us it's an investing hedge even if it goes nowhere. Silver is undervalued. The S&P is overvalued. NASDAQ is overvalued, but has a better horoscope than the SPX, so you can many times buy NASDAQ and sell S&P, but that's only at certain times. Clearly, it's got more downside. Bitcoin never should have gotten above 10,000, even 1,000, and oil over 82 is a problem. So just as we played it from 88 to 85, we're hoping to play it from, at some point, 92 to 80, but that will be in several different tranches. Our strategies are the same: inflation protection, and I don't care if it's fine iron and what, luxury items, tips. Again, this was all in our previous situation. Distressed investing, a lot of day trading. Favorite sectors remain the same: commodities, entertainment, safety and security, technology. That's a little limited there. The newer focus, I'll repeat again because that was new in December. We have a bifurcated market, so index investing is not going to do as well as picking baskets of good stocks and bad stocks. The COVID winners are not the same. Some of them will be, but the most will not. Will be defensive, dividends, utilities, especially water utilities, are good. Ag tech, vertical farming, robotics, and then over time, even though things like lithium have done tremendously well last year, they'll continue to do well. Hydrogen, rare earths, again, but we're waiting for corrections for new stuff. This was more a play for us last year, but it is a 222 play. And again, 5% inflation is the floor, not the ceiling, and gold will do well in this environment as soon as perhaps this month when they realize that it is inflation metal. Not like we've already had one in silver and hit it at 22, so copper, if it comes down to our numbers, energy on weakness, all of that we're not holding, it's tradable, and those are our 5 strategies which we hold to. Be selective. What's different here is an article recently, I think it was in Kiplinger, that the 60-40 stock portfolio is dead. Long live 333, which is stocks, bonds, and alternative assets. And obviously, as a family office and previously as a hedge fund, we did do things like venture capital, real estate, private equity, private debt. Of course, you have to be very careful with this because there are lots of sharks. This is not an easy market, although it's in some ways easier than last year, especially if you're a bear. Investors, you have to have a long-term horizon. That's why we have a lot of gold we're holding. It may not be good for another year or so, or silver. But with traders, you need a very short environment. Take your profits quickly, or at least half of it, as we do, and then go from there. We have a lot of base metals. It's the same. Stock selection, we believe, is important. This goes, almost all the same stocks are the same. So this is all in our last situation. I don't want to waste time on it. The only thing about gold I like to say is you have to decide what you want. There are companies that are very large that are just good long term. There are companies that we saw earlier, like with Goldterra, that are very speculative, and they belong in definitely in a basket, not by themselves. Whereas a stock like Mag Silver, you could just have by itself. And again, these are pretty much the same. You can find it. Healthcare is mixed. Obviously, some things like Moderna, which we dislike fundamentally, and technically and fundamentally will continue going down with some up moves. And again, what you want to do is have a list of stocks you want to own and pretend that there's this correction I'm talking about and be ready for it. You don't have to sell everything. Just have a higher cash allocation, whatever that is for you, and have some investments that benefit, whether it be gold, tips less so these days. Utilities, art, blue chips, collectibles, and selective real estate that will benefit from it. So I hope we've given you some ideas, and I'm going to take questions and answers in a moment in the chat box. For those in the New York area, we have a March 9th luncheon, May 11th, June 8th. I don't know if we're going to have a conference again this year, but it will at least be a luncheon. And our next scheduled webinar is around our birthday, which is, this time we're going to have it around August 17th. Whether we do a webinar after the Fed depends on what the Fed does, but we have a scheduled one here. We generally are scheduling them now for December, February 1st, or whenever Chinese New Year is, and August. So we're going to be having 3 scheduled ones and some unscheduled ones. So I hope you found this interesting, and let's see what we can do about going into the chat box and take your questions in there if we have some Q&A. Okay. Well, the first one, unfortunately, the first speaker was a bit of a problem, but as you know, it's a very strong company, and I recommend just following the Max Silver. Okay. What about the lunar eclipse? Well, we have nothing specific to say. I mean, we're playing the Saturn, Uranus primarily. I mean, we could look about where in the world it goes, but to me, we had a drop, but it wasn't a sudden drop. And we didn't have it the first 2 times, and we're still hoping or expecting, you know, not a 3% day, but a 5 or 10% day. But that would probably be closer to the Fed time. So until that happens, that's really what we're looking at. A blow-off move, yeah, the stocks can go up. I mean, they're going to go up potentially April and May. There could be a big move, and then we're probably going to do a sell in May and go away. And I think there's going to be some reckoning in October, depending on how the market feels about Biden and the Republicans in November. And with the right move, we may be buying very heavily end of the year. Uranium, I'm an SRI investor, so I don't like it. I know there are arguments for it, but I don't like uranium, so I don't play it because I consider this a wet dream for terrorists, although I know there are counter arguments. So I'm going to give it another minute or two. If there are any more questions, I'll be happy to answer them. We do have, as you know, my Twitter, which I've been doing. My Wall Street next week newsletter has been on hold. It's probably going to be indefinitely suspended for a while. We may go to going back to a quarterly investing by the stars, which will be complimentary. We have such a large allocation now that we'll be trading soon that I'm afraid I will be, if I give out too much information, I'm afraid I'll be front running myself. So I don't want to get into any problems. And that's why we don't give too much stock information, which we do trade ourselves. So we probably will be suspending indefinitely the Wall Street next week, but we'll get maybe quarterly investing by the stars, whether we do it in print or whether we do it this way, we haven't decided. Food stocks, we like, and you need to eat. To me, that's part of the discount thing. I haven't looked at specifics because I'm waiting for the markets to go down. So, but we do like them. They make sense. Clearly, people have to eat. I happen to choose water because it's the year of the water, but food you must have, and you see the pricing is incredible. Now, the issue always is, can the people pass on the inflation? So if you can pass it on and stay profitable, fine. If you have to eat it, that can be a problem. My view on pot stocks, obviously the best is behind us. I've always liked medical pot stocks. Is one of the ones we track. I'm not into, I think the easy money was certainly made before, but some of the medical uses, I think definitely. We have some stocks we do there. The fund performance has been a private entity, how we've done the last 5 years, but take a look at our call record, and I think it's world-class, and you can tell how we could do it with our eyes closed. But again, we're not soliciting money. We have more than enough to play with. So I want to thank you all for attending. Be very cautious. I'm going to put up the first slide. It has a lot of quotes in it, and I think you should look at it again. These are quotes from people. Again, you can read what we said in our Forbes article beginning of the year, but there are 3 things. Let's talk about, I'm just going to repeat and close with those. 1, I don't think there's anything the Fed's going to do to make the market happy. We agree 100%. Number two, the Fed is behind the curve, and they're guilty of being too easy for too long. Absolutely. And unless they do it a half a point, and even then, that might just be a sharp, quick drop, they're in trouble. Because with inflation, it's 5 to 7%, and the Fed funds, where they are, give me a break. They're way, way behind. We do not have real inflation protection with bonds. And this, the last one, with BlackRock, I continue to believe you have to be really conservative in your portfolio today. The Fed's going to have to see a few more cards on inflation and the economy, and the uncertainty is high. So we recommend conservative, uncertainty. If you want to trade, you can trade aggressively, very short term, daily, intraday, very quickly. Positional trades, forget about it. So I hope you've enjoyed it. You may want to review. We'll be putting this up again, and you can subscribe to our channel. Thank you very much. These are going to be very exciting times, and I hope I've given you some things that you'll find interesting.